Alright, hey guys, my name is Litsby, Lena. Today I'm going to be pitching Electronical Arts. And all the data was taken yesterday, so it's basically pretty updated. So I recommend a buy for Electronical Arts. The current price, as of yesterday, is $120 with 11 cents. My 12-month target price is $137.27, and that's almost a 15% upside. So for my investment thesis, I have three main points. The first one is a changing industry which allows for more opportunity, and basically what I see is that mobile games are expanding along with esports, and I'll go into what esports is a little later. And the second thing is the video gaming sales are also growing differently. You see that from digital downloads, which is like just downloading them online, comparatively from physical purchases. And then you also have in-game purchases, which is like DCLs, which is like the extended version of games. Some of you gamers might know.
DLC.
Yeah. Thanks.
Downloadable content, sorry.
Oh, thank you, yeah. So the third thing is the strong business model. That's for EA. They have major licenses and they have really good financials, and you'll see that in their margins. So, and also, they have a decent Sharpe ratio. So we take a look at this chart, and basically what we see is that EA Sports has been outperforming this gamer ETF, which has only been active since 2016. And this is the IT sector of, or like IT services sector within information technology, if that makes sense. So it's outperforming that and also outperforming the S&P 500. So now you have to pay to play just like you have to pay to play in the stock market, right? And Electronical Arts, makes games basically. They also do other little things. Most of their revenue comes from video games. And these are some of their major hits. You got FIFA, Madden, Battlefield, and Battlefront. And just to talk a little bit about FIFA and Madden, those are licensed from the professional sports. So without that license, they wouldn't be really able to make that game. But since they do have that license, and they've had it for a while, they've been able to basically monopolize on the whole industry. Basically, 50% of sport revenues come from EA, and them having FIFA and Madden. So that's a pretty big deal. Now, with the other two games, we have Battlefield and Battlefront. That's a first shooter game, obviously. And first shooter games are basically like 1/5 of the market for gaming. And their first shooter games aren't sold as much as, let's say, Activision Blizzard's Call of Duty, right? But yet they still have a presence, which is important. And this last thing I want to mention is that, because it's like a disclosure, I want to make this as transparent as possible, is that Battlefront 2, it's a Star Wars game, the second one that came out. Basically, they botched it a little bit, right? It wasn't on par as the first Battlefront, but it's basically didn't sell as much as people would like it. So that's a little disclaimer, but from what I've seen, it hasn't really affected margins all that much, and also hasn't affected the stock price completely. So I think that's one of the reasons why it's kind of undervalued, is because this was just slightly botched. I don't want to say it's completely bad, but it's a disclaimer. So basically, how does EA make its money? You have the product, right? And then you have the services. So as you see, the product, which is the blue bars, has been semi-declining over the past 5 years, but the services has been going up. Now the services is their subscriptions, the digital downloads. Now the product is basically the game itself. So what we see is that those, what is it called, downloadable content, DCLs?
DLC.
Right, DLC? Oh, jeez. Has been increasing in revenue, which is a great thing. So what we see is that revenue's been doing relatively well. Now when we break it into just segments of where they sell their products, most of it goes to consoles, right? And out of those consoles is basically PS4 and Xbox One. Then we have PCs and browsers. Now over time, if I were to put the chart up here, you would see that the PC and browsers from 2012 was 30%, it's gone down to 16. And while mobile and handheld, which was like around 7%, has gone up to 13. It's really important to think about mobile and handheld games because that's one of the fastest growing markets, right? So if EA can monopolize on making some casual games, that's better for the revenue. Now, the operation side. Like I said, before that, you have the digital, which is like downloadable offline, and then you have the physical, right? And what we see is that the physical has been kind of trending downward, and the physical has just continued to go up. So, other way around, the digital is going up. So that's better for margins because they don't have to issue like physical copies of the games, right? They don't have to put more money into that. They can just put it online, people download it, easy as that. So then we have this chart, and it's kind of complicated to look at it. We have operating margin here on the left, and you see it's been improving from 2010, and now it's pretty much like doing relatively well, and it's pretty stable for the last 2 years. And so is their gross margin, which will be on this axis, has improved just because of digital downloads. Or maybe not just because, but that's one of the main drivers. So now, I also want to look at corporate governance because there were some questions raised that corporate governance was not so great. So I pulled this up on Bloomberg, so let me try to explain it the best I can. So these little people things, those are just management changing in and out. And new management really came in 2012. This was a CFO. The CFO has been there till today's president. Then shortly after, an HR executive came in and made a bunch of changes, right? They hired a new CEO, which is still there, and a new CTO, which is a technical officer. And then the HR left, and since then, you can see their stock has appreciated in value. And they've done also better on margins, which you've seen in the past. So now, I want to go into the gaming sector a little bit. We see that the gaming sector, this is a 1-year chart by the way, because this is a new ETF, has definitely just done really well compared to IT services and the S&P 500. Now, what does EA benefit from this like competitive industry? Well, like I said, the industry is shifting towards digital downloads, which will expand their margins, right? So the more people start downloading stuff online, the better it is for them, right? So another thing is subscription services, right? That goes into the digital downloads. So you want to think about it like this is Netflix, right? You have to pay to play, but if you also want to download some additional content, right, you have to pay for that too. So you're constantly just paying for more stuff. And you see that's definitely been a revenue driver for them, so it hasn't been a bad thing. And gamers are not taken away from that, they're still paying to play. And second, esports. I mentioned that earlier right in the beginning, and basically, when you think of esports, it's like people compete, it's like watching people play soccer, but they're playing FIFA, you know what I mean? So it's just people playing games, and you have like a whole spectator viewing, and it's becoming like a competition, like a real sport. So what EA has done was like develop something called Ultimate Team in FIFA, Madden, NHL, and basically now we could like watch people play these games, right? It's like League of Legends for you guys that played League of Legends, but that's what EA's done, and they've done it well, right? And they're going to continue to do it well because they're developing more platforms and making it more efficient. Now, last thing, making popular games is pretty hard, right? Like the Battlefront 2. They put a lot of time in that, a lot of effort, but yet still they didn't perform as well they wanted to. So it goes to show that if companies want to stay relevant within this industry, they have to put a lot of time and a lot of money, and it still doesn't translate into being a hit game. So that is a risk. So the thing is, I believe that EA can mitigate that risk because they have these licenses with FIFA, Madden, NHL. They dominate sports, right? So as long as they continue consolidating their products, that's what they're doing right now. They're consolidating their games are issuing and focusing on just some major titles and coming out with better games overall. So now we're going to the games overall, or the companies are public around the world, right? So basically, I'll start with these three right here. We have Tencent. And for those of you that played League of Legends or played Fortnite, you guys are contributing to Tencent's revenue, right? I'm going to talk about Fortnite a little bit later because it's a huge topic right now in the gaming industry. But I didn't want to include them in my comparative evaluation because they're a huge holding company in China. And it was hard to like segment their revenues just for their gaming subsidiary. So kind of cross that one out. Microsoft, they own the Xbox. They also own the game Minecraft, right? But yet they're still same thing, kind of like Tencent. They hold a bunch of stuff. They do a bunch of different things, so they don't want to include them. And then Sony, they own the PlayStation. They also have some games too, but again, I want to kind of like get rid of them because they weren't really along with my valuation, if that makes sense. So with those out of the picture, I looked at Nintendo, which is it's listed in Japan, but I believe there's an ADR that you could purchase. They offer games. They make a bunch of games from Pokemon, all that stuff, but they also issue like DSs, if you guys ever play with a DS, or a Game Boy, right? So I wanted companies only focused on video games, right? I don't want them releasing consoles because that's not what EA does. EA only issues games. Then we have Zynga, right? They issue games, but they're only mobile games. When majority of the revenue, what was it, 76 or something, comes from consoles, we can't have like almost 100% coming from mobile games. So with that left, we have these four companies. Like I said, EA, their major game right here, FIFA, right? Activision Blizzard, Call of Duty. Take-Two Interactive, Grand Theft Auto. Oh, that was 20 minutes out total.
Mhm.
Yeah, you're at
No,
15.
no,
Keep going.
he is at 12 only.
Okay.
I'm
Keep going.
timing him.
All right,
Okay.
yeah. So then we have Ubisoft, which this is going also by market. Actually, we'll double check market cap, but this is the smallest of the market cap, and it's also listed in France. But you find an ADR on it too, so there wasn't really much of a problem finding metrics and all that stuff. But basically, they all do the same thing, right? The revenue segmentation is a bit different from each one of them. Like some might offer more or get more revenue from consoles, some might get a little more revenue from mobile, etc. Right? So when we look at the final four, right? Yeah, we see Activision Blizzard is the largest one, and Ubisoft is the smallest one. But I think overall, like, it gives you a range of understanding where these companies and how they get valued. We look at the PE ratio. EA, lowest PE out of all of them. Excuse me, the current ratio has the best one out of all of them, you know, just best assets over liabilities, and then has a very impressive inventory turnover, along with ROE, ROIC, you know, those really playing with these metrics are just doing really well. And then debt to equity, which is like kind of odd because no one really has like, there's no real trend here, but you know, I think it's still healthy. Like, they have no short-term debt, most of this long-term debt, and they make good revenues. I believe they're able to pay it off. So, you know, maybe we discuss that further later, but I don't really think it's a big issue that they have that much debt. Now for the relative valuation. I took a look at PE and PS, right? And what we see is that the PE is relatively lower than the rest of them, and they have really good earnings per share, right? And along with prices share, they actually have the largest one, but also they have a relatively high sales per share. So when I did the relative valuation, I got a very large number for the PE relative valuation, but yeah, smaller one. So they kind of balanced out. You know, I took 25% of each of them and then weighted it with my intrinsic valuation. So this had a 15% upside, which pretty much followed along with what the intrinsic valuation was. So I did an SCFF because he did just take on a bunch of debt. I think it was like 600 million, but I could be wrong. It should be on the balance sheet, I think, or on the one pager. So the risk-free rate, I use 3%, so I kind of rounded up 10-year on Treasury bond. And then the equity risk premium, I got the help from Demoterin, all that stuff. Beta, 5-year, cost of equity, again, basically put that together using Demoterin's numbers, cost of debt, and put those together and got a whack of 7.94, and terminal growth rate 3% because I believe we're on this more uptrend for the economic growth over the next year. So with all that said, I reached a target price of 137.27, potential upside of almost 15 or 14%. So now just take a look at target prices, right? I'm basically in line with the 12-month target price on Bloomberg. But then when we take a look at value line, that's a huge range, right? So at least mine falls into it, which, is good to say. But then we look at Morningstar, which this one's kind of dated from January 31st, 103. So they say it's basically overvalued. So disclaimer. Now for the risk and current news, this industry is like intensely competitive because like people are trying to issue the best games, right? They're trying to take market share from other people. They're trying to get into like mobile games, right? And it's not like your mobile games are just going to become an instant hit, right? The revenues are driven by hit games. And thing that I think EA does good is that they have those licenses with Madden, FIFA, NHL. So even though they might not have a hit like Battlefront 2, they still have some foundation for revenue. And so, yeah, the business model for EA is also dependent on third-party platforms. That's Xbox and PlayStation. If they don't sell that many consoles, that means there are not that many gamers. Therefore, they're not making as much revenue. So that's something always to keep in mind to see how the sales for those consoles are going. And to see when they're going to issue like a new update, so go from like a PS4 to PS5, And then second or third, we have failure to release products on time or fail to resonate with customers. That is basically what happened with Battlefront 2, right? And we haven't seen much of, basically, the market hasn't really reacted completely bad to that yet. So, but it'll be good to see what happens on their next quarterly statement, which comes out May 5th to May 7th or something. And then, again, underexposed to first shooter games or the genre in mobile gaming. I would like to see EA continue its mobile gaming, basically, and just get better first shooter games. They already have the sports games, they dominate in that. It's time to see them move forward with some other games. And then as for some current news, like I mentioned before, Fortnite will affect Activision, EA, and Take-Two results. Now basically, from what I've taken it's going to affect more of Activision and Take-Two because those ones are heavily weighted towards first shooter games, right? EA, like I said, focuses more on their sports. So, in my opinion, it's going to affect them more than it will affect EA, but overall it's going to affect the gaming industry. Fortnite has been, like everyone's playing Fortnite right now if you play games, kinda. And it's changed, like it's a free game. You could anyone can play, you could download it, you can play for free. But if you wanted to like get extra skins or like a new gun or something, you have to pay like a subscription fee. So that changes the whole way people issue games and how people pay for games, which is interesting to look at. And then lastly, FIFA 2018. It's going to be this summer. That is actually one of the strongest drivers for EA FIFA because it's seasonal. So with that said, again, I recommend a buy. I covered these three investment theses, hopefully. And I guess for my sell recommendation, I don't recommend Facebook to be a complete sell. I think it just might be of a trim, right? Because there's certain news coming out, the other data mining crisis, but in my opinion, this is still controversial. It's hard to say what we should do completely, but Mark Zuckerberg is basically mitigating all this risk. He's saying like, hey, we're scraping all of your public information, right? Like you guys are safe, but still, like he's gonna meet with Congress next week, so this is something to watch. It's 5.2 per portfolio. If we just trim a third of this is gonna be $20,000 to diversify to another stock. Then you also have the data privacy laws that are going on in the EU, so again, there's a lot of uncertainty with this. All right, and then those are my sources.
Perfect, just 20 minutes.
Okay. So, let's start with this. So it looks like their revenue from mobile gaming is growing.
Yeah.
Does mobile gaming offer the same margins as these blockbuster kind of big games such as FIFA?
I wouldn't say so, no. I didn't find any of that information. I didn't see what the cost of gold, what the cost of like mobile gaming was particularly, so I couldn't really find that information. But like when you play mobile gaming, most of the games are offered that are free, right? If you want to play FIFA on your phone, it's pretty much a free game. If you want to get like additional like players, then you pay a little bit of money for like a starter pack, right? But most of the money comes from these major gamers. They come from casual gamers playing FIFA, right, and playing the esports, and they come from more of those competitive gamers in esports, right? So people are constantly trying to purchase more within the game when they're on consoles.
When was the last time EA launched a new successful gaming franchise? 'Cause it seems like there are a lot of
it
old
was-
titles like FIFA and Star Wars that
Yeah.
have been around a while.
So Battlefront, right? Remember we have Battlefront 2 that came out, I believe like Christmas last year, right? And that one wasn't a huge hit, but the one before that, which came out like my freshman year, so like, whenever that was, like 2016, that was a major hit, right? So that was a new franchise basically. They started this whole new game and they put a lot of money and effort into it, and
it is like a new franchise in a way, but back in the early 2000s, there was a Star Wars Battlefront 1, maybe a
Yeah.
2 or something like that.
but it kind of
Which-
died off after that, right? Like, there
Well,
wasn't
yeah,
much
because
games
it
that
got
came out.
older
So,
and
yeah, exactly.
people
PlayStation 2.
or
Yeah,
whatever.
Yeah, I had that game, but
So I wouldn't consider like this new franchise more like a new. Like-
Titanfall.
Yeah.
Titanfall is a new franchise. It,
Yeah,
it
that
happened
one
2
too.
weeks ago.
Titanfall.
Two
Yeah.
years ago.
Yeah, so I just wouldn't consider Battlefront like a new franchise, more like a new line in the, because
yeah, I feel
I
like
don't know,
Yeah.
like,
yeah.
But if I can add something, it might be more inside information, but the business model for big games and for mobile games are completely different because the retention ratio for mobile games is completely different.
I want to hear Luffy talk about this.
What was that?
No, I was just saying that mobile games, the business model applied to customers is completely different because they are making a huge profit margin, but it's unstable because someone can pay a lot of money in the space of 2 months, and then they just drop it and then you look at something else.
Yeah.
So one game has a way bigger operating margin, but on the long term, those FIFA games are better because you all constantly need to innovate in mobile.
Yeah, exactly.
And it's like a wave. And
Agree with that.
yeah.
Is there anything else?
So,
kind of a little bit.
I wanted to ask about the financial metrics you decided to look at, such as inventory turnover. This is a software company. Why did
But,
you
like,
choose?
because I thought like inventory, like, you could correct me if I'm wrong, but like, I thought like inventory as like their product, their games, how many games they're selling.
So would a software so they do probably sell some hard versions of the game
Yeah.
still, and that would count as inventory, but would a software company that just allows for downloads have any inventory?
Like, yeah, I wouldn't think so. No. Yeah.
So maybe not the best ratio to pick.
What? Like,
And the current ratio, so that would be looking at their current,
assets over liabilities.
yeah, so what was the rationale including that?
Well, I just want to see like, I don't know, I was pulling data for just operational stuff, right? I wasn't really sure what metrics I could use, but I thought, these are industry standards to look at, so that's why I kind of threw these in here.
So
kinda makes
that's
sense.
liquidity, right? So
Yeah, so I
So
thought.
this is something, I'm using this as an example because I'm seeing this as kind of a weakness in a few people's presentations, the financial analysis piece, which is something we go over at the beginning of class and then people just seem to forget. But we have a lot of different categories of financial ratios. Some are more informative than others. I would really like to see profit margins comparing these different companies. I'd really like to see growth rates comparing these different companies because that would explain a lot of the difference in PE, and I don't see that here. So maybe that low PE is justified if those other companies are growing a lot faster and have higher profit margins. I don't know, because I don't have that information here. Okay. So, let's see. And then I would like a little more information on their product mix. You had a breakdown, did you go back to your slide, you had a pie chart? It goes right there. If those are reportable segments, it might be interesting to see profit margins by segment, or any other detail you can have, kind of differentiating between the segments as well as growth rates between segments, because this is a changing industry.
Yeah.
And you have a couple different competing business models, right? And I think they, as JP kind of pointed out, they look pretty different. Mobile gaming versus this like traditional gaming model where you have these big blockbuster franchises. How frequently do they refresh their franchises?
Like FIFA,
Yeah,
every year.
okay.
Because like basically what they do is like, let's say
Refreshes every
Ronaldo,
month.
right, gets transferred to Barcelona, which will never happen, right? They won't update the FIFA 2018, right? They'll update the FIFA 2019, so you have to buy Barcelona Ronaldo. You know, you can't be playing a Real Madrid. So that's what they do. You know, you can't just have the teams constantly updating, or like there'll be no reason like purchase it. And there's also like graphic updates and stuff like that, but there's not like a complete difference with new games, except there's like esports and like little
And
things.
since most of their franchises seem to be licensing the IP or trademarks of other companies, whether those are major sports teams or leagues, or blockbuster movies,
Uh-huh.
are they earning the same margin on those games that maybe some of their competitors are earning on games where they're not licensing someone else's IP?
You know, I didn't really like look into other people's licensings because I didn't see some that are like very similar to what EA has with FIFA or Madden or the NHL or like even Battlefront, right? So I would like to look into that. I would like to see the licensing structure. Although I think, you know, it's overall sound in my opinion. You're not going to see FIFA or any of these companies just cut off or sever this relationship with
So I'm
EA.
asking if they have a lower margin because they're splitting profits. I'm not asking if you
No,
think it's a good business model.
no, they don't really. It's just their margins are still competitive within their industry.
Okay, I
as it
wanna
really-
see some hard data to back that up,
Yeah.
so especially take a couple of their close competitors, and look at franchises that maybe aren't using like, the IP or trademarks of some big sports leagues and see what kind of margin they're earning.
Okay.
Can I add something?
Sure.
So for the title franchise, EA Sport, that will own like FIFA, for example.
Yeah.
But there is like their main competitor is Take-Two because they have the 2K franchise.
Mm-hmm.
So 2K Sports.
I'll look into that.
They are also having a franchise agreement. Hockey is a big one, but I know EA doesn't do hockey, but I'm pretty sure they have 2K for football.
Yeah, but it's not as popular as Madden. Madden's like the go-to.
Yeah.
But like, no, 2K is a huge basketball game,
Yeah.
so that's good that you brought it up. I
And
didn't see
2K is
that.
under like Take-Two.
Yeah.
And Rockstar is like the other one.
So-
with Take-Two.
Also some general metrics just supporting your thesis around, it being a growing gaming industry would be helpful, quantify that.
Okay.
And then with the target price, what catalyst is going, well, first I have a question on your valuation. What short-term revenue growth rate were you projecting in your intrinsic valuation? Because you didn't have that in your assumptions.
Okay. Yeah, so basically, I looked at the past 5 years and also projected it out for 10 years. And I used a more bullish, I would say, off of what I've seen from other analysts and how they've done it. By basically risen it from like 5-ish%, like just it'd probably be best if I just show you on like my intrinsic valuation.
I'd like you to explain though, like this is
Yeah,
part
well,
of the
like, revenue growth,
presentation.
like basically just did a 5% like growth. So I kind of just took it like the past 5 years. and just kinda
So
expanded it
5%
out.
is the historical average for the past 5 years?
Yeah,
Okay, and then you projected that for 10 years.
basically. Well, the next 3 years, and then terminal value is going out for 10 years. You know, like
Okay,
yeah.
okay. And then, did you change the operating margins at all in your intrinsic valuation, or did you keep them consistent?
They're basically been like consistent, like I kinda like wanted to go along with the trend, same with how we did with revenue, cause they're performing better, but at the same time, I don't see like operations getting like consistently just 5% better, like, you know what I mean? So I kind of was more, I don't wanna say like conservative, but just more straight line.
So doing some sensitivity analysis would probably help here. You're going to see, especially for most of these valuations, the larger portion of the valuation is coming from your terminal value, right? So that, like 0.5% change in your terminal value or growth rate will create a huge difference in your overall valuation. And so that is a kind of high terminal value growth rate. To think historically for the last couple of decades, that's higher than how the US has grown.
Yeah,
So that's ambitious.
okay. I could do sensitivity analysis on all three of those things, which I mentioned.
So yeah, a sensitivity analysis would help.
Yep. Overall, I just want to like mention too that even though I do think this is a buy, I also feel like there's still room for it to decrease a bit. So I wouldn't say we vote on it today. I say we give it a week. I kind of want to go through some of the stuff you guys mentioned today, and then like come back to you guys. So just,
I have one last question for you, which is, what's the catalyst in the next 12 months that's going to drive it to the target price within 12 months?
FIFA being one of them, right? I think that's gonna be one of the major drivers, more FIFA sales. And we'll see how Fortnite affects them too, right? Affect their competitors a lot more than they do, so we'll see how everything kind of changes out. Peter?
I
you
have
wanna
like
say?
5 questions.
All right, JP, what do you
So
want to
if
say?
JP wants to go.
Okay, good. I have a comment and then a question. So, I don't know if Kim would approve, but I think that a Porter 5 Force would be really good for that segment and that market, for the simple reason that right now, this whole gaming industry is shifting, and EA is losing, in total, EA, Blizzard, or Activision, Take-Two, they're all losing market shares to independents.
Oh, really?
And so, Fortnite,
That's
you were talking about, is it Take-Two? No, nobody.
Tencent.
Tencent.
Yeah, that huge China
Okay.
company.
Well, but the way they start small and then they get acquired. Like League of Legends, you talked about it.
Yeah,
It was
they got
Riot.
acquired too,
They
yeah,
got acquired,
Riot,
right? And then you have like crazy amount of small companies, and then they get acquired when they get big. Minecraft, you talked about
Yeah.
Minecraft too from
Guys,
Microsoft.
They got acquired. Like
Yeah.
that's from EA, yeah.
So maybe having like a Porter 5 Force would be, because I'd like to see like a barrier of entry
Yeah.
and your analysis on it, because you're
Yeah.
pretty good at those stuff. So I'd like
Yeah.
to see it. And other
Nice
things.
views.
I am so against the Facebook sale.
Yeah, no, that's what I'm saying.
am
I kind of like.
super against it. They
Yeah,
are
that's
so
why I was kind of
undervalued.
feeling like yes, they definitely decrease in price, right? But the thing is that there's a lot of like uncertainty in the market, and I just feel like it's so heavily weighted on portfolio. It might be smart to
Yeah.
cut back some or just add more, right?
Hold
So it's
on,
like,
I would do a presentation just to not sell Facebook.
yeah. Yeah, I agree
They're
with you.
going.
It's-
They're not dying. I mean, unless the government says you can't share information anymore.
Yeah, unless they
But-
government use them for.
Right now, it's just a little wave, and they had it. Even like Zuckerberg said, I won't fire anyone. And he said also 2 days ago, he said, well, you know what? I said like 87 million accounts were
So
shared.
let's table this discussion, because I'm still recording, I want to get through the rest of the questions. We'll talk about the sell recommendation in a bit, okay?
Yeah, as far as Fortnite affecting the gaming companies, well, obviously they affect it because, you know, people are playing Fortnite, they're not buying other games. But just to make sure, you're saying that it's kind of like the revenue way of how Fortnite makes revenue, not the actual game itself that's affecting the industry, where it's free to play but pay to win, more or less. And so it's free to play, so they get people into it, and then they make people want to pay for it rather than just like paying up front once and taking that kind of gamble.
Yeah, I think that's one way it's affecting the industry. I shouldn't say industry, y'all see me, but it's one way to affect the industry. But at the same time, it's just how popular it's become, right? That's also
Right, but-
taking market share from other people
Ye-
that
for-
have first shooter games.
Fortnite isn't made by EA.
I know it's made by Tencent.
Yeah,
I said that like 10 times today.
sorry.
No, is it 10 cents?
Yeah, I know.
So, the point here, though, you're talking about a new game not made by the company we're talking about. But you're talking about like a new business model, essentially.
Yeah.
And but you don't have the data in front of us to tell us that even though there's explosive growth there, we don't know if that's actually more profitable.
Yeah.
From my general understanding, mobile games tend to be much more hit or miss, lower cost of development, but much less staying power. That's why like you may not see Fortnite number 18 and you see FIFA 1000, right? Because you build these franchises. And that's why you had game developers like Zynga and King that were more focused on mobile gaming run into a lot of trouble. So this is a trend that may be a double-edged sword, and it may not necessarily be good, but you have to think about where EA is positioned in the industry. That is not really their strength. They seem to be more of these traditional franchise games. If they're dipping their toes in the mobile gaming, then you want to have an educated opinion about whether that's going to, in the long term, be a good thing, increase their risk, increase their profit margins, or not.
Yeah.
Okay?
I agree with you, and just make sure we're on the same page that Fortnite's a console game, and it's also like mobile, but most of it comes from consoles.
Well, the thing is, if Fortnite is like it's free to play, but you have to pay in it to whatever. The big thing with the big kind of where they hit bad with Battlefront 2 is when before they released the game in November of last year, they released like a beta in October, and I mean the beta, I don't know if it was free to play or anything, but the problem everybody had with it was microtransactions.
Yeah.
There were so many microtransactions in the game that you basically had to pay an extra like 100 whatever thousand, I don't know how much, but a lot of money
for Darth Vader.
Yeah, they had you to play a lot of money just to kind of play the game, and that was kind of the backlash from it. And that did affect EA's stock price because on October 6th, 2 days after the beta release, it was $120 per share. And then between that and like December, it decreased around 10%. So